A large coalition of consumer advocacy, nonprofit, and religious groups is calling on state legislators to scrap a controversial short-term lending bill. The legislation passed through the state Senate and now awaits a hearing in a House committee. While some lawmakers say the proposal gives more options to Hoosiers with bad credit, opponents say it will only worsen their financial situations. Barbara Brosier reports.
When Stephen Bramer returned to Indiana after serving during the war in Iraq, the transition to civilian life was rocky.
I was in construction my whole life, and when I came back, I was working for an engineering company. And I was doing good at first, but I was drinking a lot also.
He came to this VFW in Hammond for help and eventually found a new purpose, helping other veterans navigate through the changes that come with civilian life.
We help them with their claim, and I kind of help guide them through the process.
That sense of direction allowed him to focus on being a good husband and father. But he soon hit another roadblock, a lengthy custody battle that he struggled to afford.
My lawyer was ready to drop us right before the trial.
So Bramer did what he thought was best. He took out a payday loan to cover the legal fees, and that started a vicious cycle.
I tried paying it off all at once. So if I took out like a $1,300 loan, I'd pay back like $1,800 on them first. Well, even that's unsustainable because then that's $1,800 less for the next month. So it's nobody really explains that part to you.
A Republican state senator says he wants to provide more options for people like Bramer who have bad credit but need loans. Senate Bill 613 would expand existing payday loans and offer new borrowing options.
So what we tried to do was create some options in that arena at rates that are 40 to 70% less than are currently available in payday lending.
Under the proposal, the new 6 to 12-month loans would have a lower annual percentage rate than existing payday lending options, but it's still 192%. And the small dollar loans would allow people to borrow up to $4,000 with an interest rate as high as 99%. That's against current felony loan sharking laws in the state, which the bill would also change. On top of that, the legislation increases fees, but Zay says it's necessary.
It is giving them access to something, and honestly, at a much better rate than is available in the current mode with payday lending.
But a long list of groups opposes the bill and rallied at the State House earlier this week.
This is the fourth year in a row that a coalition has been assembled to fight against the continuous attempts by out-of-state payday lenders and others to expand the harmful loaning products here in Indiana.
The coalition calls the proposal predatory and harmful to Hoosiers.
We're adding new products that are much larger, much longer. And so yes, while the APR is only 192%, this is still an unaffordable loan that's conditioned on either access to your bank account or access to, say, your car title.
Macy says she wants to see Indiana legislators study payday lending before passing any bills expanding the industry. The national nonprofit policy group Center for Responsible Lending is also against the legislation. Its analysis of the bill says it creates an inescapable cycle of debt for borrowers.
If SB 613 passes, this will make Indiana among the top 10 worst states in the country for predatory lending.
That worries Bramer, who says the state's current payday lending industry does enough harm. He's still trying to pay off the loan he took out about a year ago.
You think that you could pay back something, but then you don't realize it's like a cycle, and that cycle is so hard to get out of.
He hopes his story serves as a warning to legislators.
As a whole, this is not a good option, and I hope that they do vote this down.
For Indiana Newsdesk, I'm Barbara Brosier.
The bill has yet to have a hearing in the House's Financial Institutions Committee.